Thank you for joining us today. I'm your host, Tracy Bennett. In studio with me are certified financial planners Tony Payne and Stephen Lucan. Hey, guys. Good to have you here.
Nice to be here.
Nice to see you as usual.
Thank you.
Getting into it, today's topic is Beyond the Mortgage, Hidden Costs and Protecting Your Home and Identity. This is a real hot topic on social media. I know you love talking about social media.
I don't know what that is.
A lot of people get their information from, dare I say, TikTok and YouTube, and I thought it would be fun to talk about. So really what goes into owning a home, not, sort of beyond the initial mortgage. And we do talk a lot about this at the office, so I'm excited to get into it. So the true cost of ownership, what are all the monthly expenses that can sneak up on a homeowner?
All right, so I'm gonna rewind a little bit there because one of the most frustrating things I see through certain real estate apps is how much you can afford, and it's always tied to the mortgage payment.
True.
That's not the affordability of a house, so that needs to go away.
Okay.
And unfortunately, it won't. And that's what really was driving the housing market was here's the affordability aspect of this house, but it's not just the mortgage. Go ahead, Tony.
No, right on that. I see it with as you get older and you're looking at maybe it's that family home that you've had for 30, 40 years or something. The kids are out, you're getting a little older, cutting the grass is more of a pain or something. And you're looking at your wonderfully low mortgage rate and you're wondering, why would I pay more for this smaller, newer place with a higher mortgage? And I can't help but challenge that a little bit to say, well, if the mortgage balance is smaller, first of all, well, then you might be able to have that newer place even at a higher interest rate. Or what about all that deferred maintenance over the years? Have you been keeping up the roof, the plumbing, everything on the driveway? I mean, all these things that could be multiple thousands of dollars at once, and maybe you have to borrow money to put the windows in. Is that interest worth it? Consider all of that because that really is part of that hidden cost.
Yeah. And that's the other thing that people don't, when you talk about an asset, there's a cost affiliated with your assets, whether it's a car, a pet, right? A size of a St. Bernard versus a 2-pound poodle, a 3-pound poodle, right? The cost of ownership is significantly different. So that really ties into the house as well. So when you have an asset, whether it is a car or a house, and what we're talking with is you have to figure out what is that cost of ownership. That's a big piece of the puzzle.
Okay, I want to run down the long list. Let's pretend that we're talking to a 30-year-old, 35-year-old that's looking to buy a home, and they've got a bump in pay, and they have a spouse that makes a living, and they think they can afford their dream home. What should they be looking for?
I would say, first of all, what have you saved? Look at yourself first. What are you saving? What's your income? Do you have a windfall that provided all of this? Have you been able to save this just in the last year? I would start there. How did this come about?
Right. And it's more than just, okay, we were paying rent of X dollars and that's what we have for the mortgage. Because when you rent, you're not responsible for the upkeep and maintenance.
And that's what they do. Actually,
correct.
Those are the conversations I hear. Okay, we're paying
$2,500
a month for our rent. We can afford a $2,500 mortgage per month.
Yeah, that's not true.
So
maybe not, but usually it's not a direct correlation. Because of the cost of ownership aspect.
Well, and especially
taxes.
Especially not in a condo when you add up some of the HOA fees and some of the extra costs.
Right. And the HOA fees, that's talk about a potential trap and we see it in Florida right now. For years, HOAs were undercharging the cost of the maintenance of that property, which includes deferred maintenance, a new roof, a new road work, and so forth. And they fell behind. And now the law changed saying you have to have reserves done, have a reserve study done, and people were underfunded. The associations were underfunded, and it led to massive, and I'm saying massive assessments where people had to put in tens of thousands of dollars into their reserves and it didn't have it.
Wow.
How do you write a check for $20,000, $30,000 and then all of a sudden the value of that whole association plummets?
Right.
Yeah, you were that lovely retiree living on a fixed income, went into your dream place, and then here's these surprises coming. And that's, again, part of the cost of ownership, these hidden things we're talking about. I mean, even the idea of the community you live in and property taxes, the idea of where you started versus where that might be now, those property taxes might have quadrupled or more. And again, every time you're living there as a retiree, that may not change. They may only go up. So these are other things that are hidden, or maybe they creep on you. Maybe they weren't so hidden and it was okay years ago, the property insurance, the taxes, but now it's starting to creep up more. These are things to pay attention to.
So what bulks up the bill every month?
Well, every month it is the unforeseen expenses, right? The hot water heater, and then the older the house, the older the property, the leveling of the sidewalk, the leveling of the garage, all those things that you don't know about, the HVAC. These are just significant costs that you don't plan for, and then they creep up. And especially if you think about it, when you buy a house maybe in your 50s or 60s, and then all of a sudden when you're 70, 80 years old, can you afford a new roof? Can you afford a new HVAC system? Very expensive.
And if you are a handy person, think about it. Even those trips to Lowe's or Home Depot, at a minimum, usually are $500 a trip as a homeowner.
Right.
I mean, you're not walking out of there for less than that with any real stuff for the home.
New paint. Right, don't like the color of the wall.
Lots of paint.
Right,
Lots and lots of paint.
and the thing is, if you have a standard of I want to keep up with the times, I want to be modern. Some people don't change their homes. I love this. Still looking at the 70s shag carpets, right? You know, like they've lived there for 35, 40 years, right? I can tell you when that home was built based on the design. But some people like a modern home, and they're always remodeling and changing it up, and that's very costly. Right, it's okay if you can afford it, but it can add up pretty quick.
We're hitting that part of the cycle, I think, where some of those antique homes are coming back in.
Yeah.
You know, where the stereo system was built into the wood and everything.
I was just talking about this.
Yeah.
I was just talking about this with somebody because it cracks me up. There was a time where you would go into some of the antique stores and the furniture just didn't move. And now people are repurposing antiques and modernizing them. And I'm a big advocate of that. I love it just on the creative side. I love doing that. You know, I love to see people kind of taking an interest in.
If you wait long enough, it all comes back into.
It does.
Right?
Yeah, it does. You see it all over the place.
Yeah.
Yeah, that new kitchen style, whether it was stainless, whether it was white, whether it was wood, whether it was painted. I mean, you said it. Going through that cycle, does your home look the same over those 40 years almost, that cycle of we bought it, maybe we had kids, we raised them, they're out of high school, they're off to college, we maybe even hang on a couple of years to see if they come back. That's a decent long span. Did you keep the kitchen up? And if not, those are things that are going to bite you when you put it back on the market,
Right.
usually.
The kitchen remodeling, wow,
Yeah.
that's the most
Isn't that
expensive
crazy?
most expensive room in the house. Most people don't
Unbelievable
realize it, and that's the other thing.
And it'll go out of style in 5 years.
Correct, right? Just from the appliances alone, and then the remodeling. When you do a remodel, wow, very, very expensive.
Yeah, because
right?
what you do is you say, okay, this is what we're going to do. We just need new cabinets, and before long, you're looking at the overhead, the fan. You're thinking, oh, a convection microwave might be fun.
right.
I've always wanted an island right here, and
A
before
pot
long,
filler, perhaps. A pot filler would be nice.
You're looking
Yeah.
at $50,000. It's insane.
Four most famous words when you're building, right? While we're at it,
Yes,
very costly words, right? right.
in there on that. Yep. Absolutely.
So again, right, and it's human nature. Again, we don't throw stones because we all do it, right? But that's part of the process.
The other thing, when you think you were asking, what are those other expenses, the hidden ones? Usually the longer you're there, the more stuff you accumulate. And it's almost like the house becomes storage. So whether it's
An
building a
antique
shed,
storage,
a barn, right? Whether it's just expanding that piece, those are additional costs. I see you smiling there,
Yeah.
Jason.
I'm doing the bite the tongue thing because my sons preach to me constantly about this, because if you gave me something 20 years ago and you made it, I'm not ever going to throw it away. It's meaningful to me.
Okay.
So I'm not a hoarder, but
So what
you know.
what do they give you grief on accumulating stuff? Just say you're leaving it in the part of your estate
well,
plan.
here's the thing. No,
exactly.
honestly, here's my argument. And I know that there's a lot of, I'll just say moms out there who do the same thing. I have 2 kids. They're going to have a house someday, presumably. They don't want to take some of the stuff that I'm giving them to an apartment in case there's a fire.
But they
God forbid,
will
or
want it
something.
one day, probably. Maybe.
Yes. So
maybe.
my entire, they would argue, they're going to listen to this and go, yeah, right. But my entire main floor, there's probably 6 or 7 pieces of furniture that are going to go right away, that line the walls, that I'm keeping for them, that are family heirlooms. And yeah, I'm using them, but I don't want them. I don't need them, but I also don't want to put them in a basement or something.
Right.
Now, that piece makes sense. You know,
Yeah.
the furniture, holding on, repurposing. I'm thinking about my parents consolidating from that family home, and I'm going to say maybe that basement that looked like a Hall of Fame trophy room, maybe, from everything from first grade through seventh or eighth, and all those extra pictures. For
Tony, it's hard. It's hard.
There's a lot of emotion, but that's the part. We downsized now is 10 years ago. We did downsize in our 40s, and it was a hard I had to overcome a lot of emotion on getting rid of stuff, whether it was my baseball card collection, photo albums. And I had to put them into storage areas, right? Yes. So, you had to make decisions on what stays and what goes, and it's very, very emotional. But you have to do it. And the irony is, everything I touched and looked at, I remember how I acquired it, who gave it to me. That made me feel good. But it's just stuff, right? And that's you got to overcome it. And there's some good documentaries on.
Well, then you have, in my case, I've lost all three of my parents. I lost my sister, and my husband lost his parents. So we accumulated stuff,
generations.
And it's so funny. I get blamed for the garage, but most of the garage is tools and stuff from.
We'll leave those useful things alone, okay? All
exactly.
right? I'm looking out for you. All right?
I'm literally just saying I can't stand wasting money. I can't stand buying something I know is in the garage somewhere because dad left it or mom left it or whomever.
You need that third toaster because the first two are going to break. Right? It happens. I know that because I've done it before. So
see, I'm glad I'm in good company here because as the cold person or the cold financial guy, sometimes I had that conversation with my own mom. I mean, going through to say, realistically, what stays, what goes. I've been through a loss recently too, so to go through things and say, how do we consolidate? What's the estate look like? You're going through it, and if the kids are younger and they're living life and they have jobs or families, the idea of do we have every night to go out there and go through the photo album picture by picture, or is it, what do we do with this and get rid of it? Or, it's overwhelming, or do we do nothing? And that's sometimes the worst. That's where those emotions really come into your finances. You inherit a home. It's easy to say, well, this is what it's worth. This is what it'd sell for. But what about clearing out all the rooms? And the idea of if emotions take hold, you're paying property tax, you're keeping that property open, maybe it's vacant. I mean, there's a lot that can go on because you're not renting it out either with those emotions that'll say, well, if I have this tomb to my stuff almost that I'm going to go with, I'm not mobile, I'm not going to leave it. That's a cost.
Yeah. And that's part of the life journey, right, is your house. Are you, and we've become very transient as a society, but once you are anchored down, you have years and years of emotional history there for your family, and that's hard. Yeah. And then will that day come where you ever leave that house on your own? Not your last time, but you're selling it and moving. That's a big, big journey. And it's almost, you want to wait long enough, but you don't want to be too late. Because once you get accustomed, you get familiar with it, it's great, but does it have stairs? Is it safe in your older years, right? Is it a safe habitat for you? A lot of times it's not. Again,
that cold realism. I mean, as we have an aging society and we think about aging parents, the idea of, well, what happens if they had an event? They needed to go into a facility for a certain amount of time, or they just needed a lot more help than what you could provide as you're working and living your life too. Do you keep the house? Do you recommend they keep the house? I mean, there's a lot of emotion there that if they're spending a lot on that house every single month that might be needed for their care and emotion again takes over, you might be making a financially, I'll say, unwise decision based on emotion, which is, again, super hard. The way to try to address this stuff is think about it early, talk about it early. When you can joke about it over Thanksgiving and say, you know what, when we're gone, clear all this out, have a bonfire, whatever. It releases people to be able to do that. Or say, hey, here's where I want you to donate all these things. Having the discussion helps.
I'm not going to let my sons listen to this one. I'm not going to tell them we did this one. But circling back to actually the purchase part of it, and we're presumably really thinking about people first starting out, right, with their first home. There are so many seemingly marketing draws to buying, builders have their own way of managing this as well, but there's a lot of marketing out there. Yes. Can we talk about that a little bit and maybe dispel some of the things that, or point people to be the knack?
And I would say if you're, the easiest thing to say is if you're buying directly from a builder or building a house, get an attorney, right? That would be the first thing. It's costly.
Really?
you've got to understand what's in the documents, and you've got to understand that there could be gotchas in there that you just don't know. They're said somewhere in the fine print, right? Tony loves fine print.
I do. I love my fine
go
print.
ahead.
And if you think about examples, I think about one of our partners who had a home built. I can't help but think of him in his lawn chair with a cooler next to him, watching it be built. I mean, literally going out with his ruler almost and his level.
Yeah.
Well, that kind of thing they've caught on to, a few builders have. And in the contract, when you're signing that, you're basically saying, I can't go on the property until you're done. And sometimes it even says I can't have an independent inspector come in along the way, which, of course, if you're building in mass and kind of factory cookie cuttering homes, it's a lot easier that way without someone who is putting their life's work, maybe the biggest piece of their net worth, into this property.
Right.
You're going to want to maybe sit in your lawn chair and watch it built.
Yeah.
But if you didn't see that in the contract, or you didn't have an attorney review it, you might have, again, put that down payment down. You're stuck. You're committed.
Right.
And then it comes up.
Yeah, and it's all relative. It doesn't matter if it's a $400,000 home or a $1.5 million home.
Exactly.
It's your income and
Yep.
and it's your largest expense. So
Yeah.
you do tend to be perfectionistic and dare I say tyrannical.
Yeah.
about
And
certain things.
I said the word attorney, and you should almost do that anytime you're purchasing a house, just to look over the mortgage, right? And that's seemed a little extreme, but you do need a professional to look over your shoulder, right?
And the more unique the home, the more that I think that's relevant too. I mean, you think about a lake house or a property on the water, maybe there's a marina, a dock, you think about things like that. What are the rights on that? Or what are my obligations? Some of these environmental rules where if you own that dock and that starts to go and you need to repair it or else something's going to happen. I mean, there's certain places, even, middle America, where you might be on a river or something like that, where depending upon what you buy, you're responsible for some of that.
And the seller doesn't disclose that, right? That's in the documents, right?
Right,
Yeah.
right, exactly. That fine print.
That would never occur to me. That's interesting.
Yeah.
So is there anything that we can shed, any light we can shed on the builder's side other than, look at the contract as far as the marketing and the interest rate opportunities that some companies will present to buyers?
Without naming names, and just look at some of the bigger national builders out there. They're starting to really offer promo rates.
Right.
Maybe it's we'll say an adjustable rate after 7 years. It might be something as low as 3 or 4 or 5%, because they're basically acting as the mortgage company. And now that they have homes built or they have properties on their books, they need to get rid of them. Just like anything, if I have extra oranges and I'm a grocer and they're going to go bad, I need to get rid of them. Mm-hmm. And if you think about having property half built, that's usually the mindset.
And there could be a timeline on that teaser rate, right? Where all of a sudden it could be accumulating other interests, and you could, just like if you bought a TV from a big chain, they say, 0% due in 4 years. And you don't pay it off in that 4th year, and all of a sudden you have a huge interest bill because it's been accumulating interest and you missed the deadline. That's just one example.
So if it seems like it's too good to be true, it's probably too good to be
No,
true,
you just got to be careful. It's all there. The rules are laid out for you. You just got to make sure you understand the rules.
And again, if you're going into this and you're ready, you've saved, how much house you can afford, you're building your dream home, the idea too of, well, you are offering me incentives. The market shifted a little bit. Do I take this $30,000 and, use it for the shower upstairs? Or do I use it to maybe buy down the rate? Or do I just lower the price of the home as this builder incentive? How you utilize that will come down to where you're at, what your situation is, but knowing those options and sometimes having to ask them. Builders are not fiduciaries. They don't have to present the same deal to everybody. I mean, it depends on the state, I think. But the idea that there may be things that you miss out on unless you ask for it, ask about it.
Yeah.
Right.
I love that answer. That's exactly what I was looking for, and actually shed light on my questions.
And there's one scenario I've seen is tax abatements. When they're trying to lure people into an area, they'll say, okay, no property taxes for 15 years. To live in an urban area or something like that. And we've seen that in downtown Columbus. But you see the property values as they get closer to that term ending, the property values aren't changing. So, I always joked and said, basically, you're paying the builder for that abatement. The builder collected that abatement money because your property value is not changing as much when the abatements end. Yeah.
Wow, that's interesting.
Yeah.
Okay, I want to circle back to home maintenance. I've heard you guys talk about having a certain amount of money saved when you're buying a house towards maintenance. Can we talk about that a little bit?
Yeah, again, it really plays into, like we were saying earlier, the age of the home, the size, the features. I mean, again, if it's that brand new build and it's under warranty and you're able to call somebody and say, hey, this isn't right, that may feel a lot different than buying a 50-year-old home that you've got to rehab things on. So the idea of, do you buy a home warranty even? That maintenance aspect, you've really got to read the fine print. None of them are all the same here. And will it apply? Or maybe it applies and I have to wait and I have to go through their vendors and wait and basically be on the hook to them. These are things to consider. I know some will say, oh, I got the warranty with it. I got this. Well, if every dishwasher went out and they've got to replace 2,000 of them, how long are you waiting?
Mm-hmm.
Yeah. And the other, how handy are you, right? Some people are willing to do the work themselves and have the skill set to do the work themselves. That sweat equity is important. Versus I'm not very handy, so I limit myself on where I want to overextend. Right, right. It's like I'll try to fix a faucet, but I'll probably call a plumber. Right, that kind of scenario.
But how do people plan for that financially? I mean, when you're setting out to buy, let's say you're setting out to buy a home that's a year and a half old or 5 years old.
That's where the emergency fund.
Okay, that's what I want to talk about.
Yeah.
So what's the number? Was there a percentage or a number that people should be considering when they're doing that?
Tony brought it up earlier, the size of the home, the cost of the home, right? The bigger the house, the more expensive the house, the bigger that emergency fund should be.
Percentage of the cost? Or
Well, I'll take it this way. Paint this scenario, the worst case almost. You're a homeowner, you're a new homeowner, you have a stay-at-home spouse, a young family, you lose your job. And then something happens, the septic tank goes. Well, think about that scenario. Depending upon what went wrong with the home, you may not be able to use your home equity, because depending upon if it can pass an appraisal or an inspection, you might not even be able to tap into the equity. So the idea of, I can always use the equity, challenge that first. And then the idea of, okay, how big is my biggest expense? Depending on the size, the age, if I needed to replace the roof or the driveway, how much is that? And worse yet again, I've lost my job. I've got that young family. Well, I'm not just taking care of the house. I've got all these other bills. So you've got to think about the whole picture. What am I spending usually every month? And then how long am I going to be able to make it until I get that next job?
This is sort of another topic, I think. And we've talked a little bit about the home equity line of credit. But you're bringing this to the front of my mind, so I'm going to ask it. Does it make sense when you're buying a house to have a home equity line of credit in tow, ready to go if you ever needed it?
I would say most of the time it would make sense to have it opened and available to you, because to Tony's point, you lose your job. If you go to apply for a home equity loan and have no income, they're probably going to reject you.
Yeah.
I hate to say it, but that's most likely the outcome. So you have it as an emergency reserve. You don't need to use it. You don't need to tap into it. Just have one available.
Does that do anything for a first home buyer who's looking to buy a house? Does that strategy minimize their financial ability to own a home as they're planning? Does that make sense?
Yeah, I mean, if you think about a traditional home buyer, you might put 20% down. That would give you 80% basically as that loan. So that loan to value, this is where those numbers come in to say, well, could you even get a home equity loan? Is there equity in the home that, the bank can say, if your home went down 10% in value, are we still going to be in a good position? That's the kind of math they're doing. They're always wondering about their position. So depending upon how much equity is there, if you're that first-time home buyer and you're putting half of it down, you may be in the position to open a line right away and be able to utilize that. But if on the other side, maybe you're a first-time home buyer and you're utilizing FHA or something, and you're maybe only putting 3.5% or 5% down, you're going to be a long ways away from being able to open that equity line.
Okay.
Yeah.
I want to circle back. I want to give people a hard number or percentage. So should it be 1% of the cost of the house? I know I've heard you talk about that before.
You're not going to get an answer because it depends. The answer is from us is always it depends, because again, there's no two situations. I know. Yeah.
Make sure it's enough that you can still save, you can still live, you can do enough that you have some extra. So whatever that is. And
so take the maximum, in my mind, that means take the maximum cost, maybe if you needed a new roof, 20 grand, 20, whatever a roof costs now.
Yeah.
And make sure that's in an account for the house.
And then
at all times.
Right. Well, yeah, but then what else? What's the unexpected? When's the last time you replaced a hot water heater?
Right. But then if you have that rolling account with that amount of money relative to the size of the house, at least.
And then, but how long would it take for you to replenish it then? So let's say you need a hot water heater and it costs what, $7,000. Okay, now you spent it on the hot water heater. How long does it take you to get replace that $7,000? So when the roof breaks, you still have money for the roof.
So then it becomes about your cash flow too.
Exactly.
Okay.
And that's affordability of the house.
Right. And that doesn't address the buckets that you need for your replaced income.
Correct.
Emergency.
And that's why the house is a dangerous asset to own, because most people don't realize the costs behind. And it's just the freedom, like you said, the freedom of painting. When you rent, you don't even think about painting because it's not an option. It could be, but then you're like, why bother?
Yeah.
Right. So don't do it. Right. But when you own something, you have that freedom to say, I can do this or I can do that. And that's where it gets dangerous.
My father-in-law used to say the only thing holding our house up was the paint, the 12 coats of paint, because I would paint it and go, I don't like this color anymore.
Back to the paint store. Yeah.
All right. Let's talk about insurance gaps and overlooked coverage. So most people assume their homeowner's insurance covers everything, but does it? And
depends where you live.
What kinds of things might not be included, I guess.
Yeah, the might not be included are the ones that you hear the horror stories. I mean, I hate to say smile. We're not smiling at it. It's somebody's family who's really out there at a terrible time, and you went through it and to say, well, did I pick my home insurer off of a commercial?
Right.
I mean, usually the ones that you see the commercials for, the underlying coverage is different. So when you're saying gap, it may not be a gap necessarily. You know, you may say my house is worth $200,000. This insurance said they'd give me $400. I'm covered for the most part. But then there's a different type of coverage that may say guaranteed replacement. And the scenarios where, 2,000 homes, $150 billion of damage, and that California wildfire. I mean, when insurers are paying money out like that, they are nickel and diming. They're going through everything to say, how do we protect our company, our shareholders? So if you didn't have that guaranteed replacement, back to that example, and you were given that $400,000 check, and everybody in your neighborhood needs a builder to rebuild, they're going to start changing their prices. So when they buy wood or they buy their sourcing locally, they're going to increase that price too. So now what you thought might have been enough, that $400,000, double what my home was worth, unless you have that guaranteed replacement cost, you might still be building a home that's half the size because the cost doubled. And that's a big gap. Again, depending upon your coverage, you might see it as I'm fully covered, I'm good. But those are the kinds of gaps to talk through with your agent, review, what's in a worst case scenario?
The agent is so important in this, and a good agent will ask the questions, right? They're going to ask the questions to try and paint a picture, and that's where we can't overstep our boundaries as a financial planner, but we can say, okay, here's the questions to ask, and the agent should be asking more questions. The one thing I always ask is, what if your basement had a foot of water in it? What would have to be replaced? Because that's one thing that most people don't insure properly.
And it's perfect because when you play that, I say play the game, but when you do that with the agent, you find out they ask your question back.
Right.
How did the water get in the basement? Right. And it's like, hold on. I was calling you about the water in my basement. Why are you asking me?
Yeah.
But if it was the water backed up because, hey, something came through, or it was a flood and it came in from the top, or there was a hurricane, any of these, they're going to apply differently and use different rules. So that's where knowing your coverage and your gaps is really important.
And the big one is the environmental catastrophes, is the fire and floods, and making sure you know whether or not you're covered there. And flood insurance is a separate policy, earthquake separate policy, hurricane, wind, rain, water. Right? It all depends. Now the storm surge became a big thing with hurricane insurance. All of a sudden, it used to be, I have hurricane insurance, but was it the hurricane or was it the storm surge?
Or the wind.
Right? So you have to ask those situations and say, okay, if this happens, what policy covers it and how?
I think we need to do a show on the questions to ask for insurance, because I'm sitting here listening to you thinking, in all of the years I've been insured, I've never had an agent ask me questions.
Right. They're a lot of time they're order takers.
They're order takers.
It's not
and you
not
don't know the
fair.
right questions to ask them.
Yeah.
So it's a good faith industry where you're trusting that they're going to provide you with the product you need.
Yeah.
I've been burned by that.
No, and speaking of burned, and I can't help but go there, but you think about worst case scenarios. You're already down, your house had a fire, everything bad's happening. What if it didn't burn all the way down? Well, somebody's got to pay to demolish the rest of it, remove that safely. If it's an older home and had asbestos or other things, you've got to pay for. Somebody's paying for that. And depending upon the kind of insurance coverage you have and how much toxic was there, you might have what was going to be part of your rebuild money going to removing debris. And we think about wildfires, things like that, where you make that best effort to try to save a home, and you hate to be thinking in the back of your head, I hope it burns all the way down. That way I don't. Yeah. That's the worst thought. You don't want to be there.
And you go back to the California wildfires, some people can't even rebuild because of zoning now. It's awful, right? So you talk about the asset, the house, and the insurance, but they're not even allowed to rebuild there because of state laws.
And let me continue that. Yeah. Some homeowner insurance companies will only pay you to rebuild. Some will give you the money. Hey, here's your check. You don't want to live in this half of a mountain anymore. Go move on. Others will say, we'll give you the check, but you got to rebuild it. And that's, again, depending upon if you've asked your agent, if you've had the discussion, well, what happens if I had that loss? Would you want to rebuild in that same spot, or would you want to pack up, go somewhere else?
How many people actually read the declaration pages or the actual policy when they get it? Here's how much it costs.
Stephen, they make it impossible to read. I've tried many times to read those deck pages.
So then you ask the agent, show me where it says.
I'm
Googling, it's terrible.
Tell me what this means. Tell me what that means. Give it to me in the lay terms. It's like they purposely want to confuse
by their
you.
attorneys.
Yeah. I mean, it all makes sense now. We had, I don't know if you remember those tornadoes that whipped through Columbus a couple of years ago. Well, it carved a line right through my neighborhood. One house over. We heard it in the basement. It was terrifying. But there was one house that was about a block away that was absolutely obliterated. It was just looked like popsicle sticks. Yeah. And it sat like that for months, untouched. So now it makes sense because maybe those people were experiencing difficulties from the insurance company.
And that's a lot of the times you'll see that is the cost of the rebuild, even for a business or something. It took so long to reopen. It might be because of the insurance claim.
Yeah.
I have a follow-up question to that. Why were you in the basement during a tornado? Don't you go outside? That's what we do in the Midwest, right?
No, I'm that.
People do that. They run outside. I'm running to the basement.
My husband likes to do that. And I was caught in the sirens when I was a child and our car stalled. So I'm kind of triggered by this. So I'm in the basement.
Get the safety, right.
Yeah,
right.
But we heard it, and if you've ever seen Twister, I half jokingly say this. It sounds like a freight train.
Yeah.
Those were not special effects. That's what it sounded like.
Sure.
And
you always hear people say it's a freight train.
Yeah, we heard it, and we looked at each other, and I said, "Is that what I think it is?" He goes, "I think it is." And all of our cats were staring up at the ceiling as well.
Yeah,
they were all down
there. Like the barometric pressure.
I was terrified to open that basement door.
To bring it back to the planning here, I mean, when you open that renewal or you get that renewal for your homeowner's insurance and it's skyrocketed, you feel like, and you want to shop around and this one's half the cost. Why don't I do that? Read the declarations. Go through the details. Yeah. Are you going to be that person waiting on a check being nickel and dimed? Or, hey, are they going to pay for you to stay downtown at the Ritz with your house being rebuilt and all these extras paying for your food? That's possible depending upon the coverage you have.
And we're not here to... There's a lot of good insurance companies. Understand, right? So that's a key piece to this.
But this is good for people to understand what
to insure your house.
Yeah. Again, I can't help. Sticker shock's real. We've had more and more losses. Insurance premiums go up. So it's just natural to say, I want to shop around. Am I getting ripped off or not? So if we all think of insurance as a commodity, they're all the same. You could be really out there hurting yourself because, again, it's about a catastrophe. That extra couple $100 is real. But if you're talking about a couple $100,000 or $1 million home or more, the idea of, is it going to be rebuilt the way I want it, of the same size, you're paying for that catastrophe.
And that, again, going back to the cost of ownership of the house, insurance is a big piece of it, as we just discussed.
Yeah,
right?
Colossal.
Yes.
Okay, another scary kind of juke here is the title fraud and deed theft awareness that's kind of running rampant. I talked to you a little bit about it. People whose homes are paid off are actually learning that somebody has absconded of their title, and I don't know how this even happens, but they lose their home to somebody
Fraudsters.
stealing it
Yeah.
right out from under them. I just don't understand how that can happen.
Most of the time it doesn't, but there's a lot of companies out there marketing on this and trying to get fear and selling insurance. So yeah, looking at the numbers, it's very rare. I mean, the idea of someone stole my home, it's a very, I mean, again, that reaction, I'm so afraid of it. Why wouldn't I manage that? But again, that's the idea of, well, they could sell insurance for a lot of things. Should I be buying it? Well, what's the risk? Are you someone who, again, you're aware of things, you're getting your mail? I mean, there's a lot of differences. If you own 3 homes and one of them's a rental, you can have that example where you overlooked something. But at the same time, most families with that primary mortgage, that's not even a possibility. But you see all these ads, you see
This was on the news.
Oh, I'm sure of it.
This
Again,
was on the news.
The fact that it's in the awareness, I guess, is the part that's, they talk about it fearful. Be more worried, I think, about, do I have enough homeowners insurance rather than maybe this gimmick insurance.
But how do you monitor? You monitor through credit checks. You do your credit reports, annual free credit report, making sure there's no liens against you or accounts opened. You have to be on the offense.
Right.
And that's whether it's a bank account, a house, your identity, even for tax returns, unemployment fraud against your social security number. There's so many different ways to steal from people. You just, as the consumer, need to be on the offense. And that's through monitoring everything that you own.
And that's the next bullet point is smart home security and identity protection. Those cost as well as you're looking to buy a home. Those are things to consider.
Yeah, the smart home. I think that we're in a interesting phase when it comes to the smart home. Right, it's just we're starting just to see it from cameras out in the front door to just in the house. Right, even through the little devices. I won't say the name.
Opening your
it's getting
blinds.
pretty cool.
You're in Seattle and you're closing your blinds in Columbus from your phone.
Yeah,
it's insane.
Pretty cool. Yeah.
All plays back into that homeowners insurance we kept talking about too, because each one of those will have different features, benefits with it. Sometimes you get a lower rate with some of that stuff.
Yeah.
We talked about the role of emergency funds a little bit. I think it's probably the foundation of everything we talk about, right? Is the emergency fund. But let's talk about refinancing or reassessing a mortgage. So if somebody has a home that they're looking to get a better interest rate, how does somebody know when it's the right time to refinance, or if their current mortgage still makes sense, or if they should pay it off completely?
Are you going to tell her, or should I tell her? It depends.
Oh my God.
I know we're trying to close up here, so I'm like, okay, which part of this do we cover before we close? But yeah, the idea of having available credit is usually a good thing. It's like insurance sometimes. If there's a cost to having that line of credit open, that's usually how I think of it. It's like insurance to have this available money, to have the line already open. So it depends. But
yeah. And I'll just add to that the closing costs. What does it take? Like, what are the closing costs to refinance? And then are you going to be there for a year or for 10 years? Because that matters too. And are you going to get an extra $50 a month in cash flow because of the payment? Or is it $500 a month? So it can be used to your advantage based on the refinancing, but look at the closing costs and also be aware of how long you're going to be in that house or condo, whatever it is, because that matters for the refinance.
And maybe one last one, because I keep saying insurance. That's my favorite word today. But you've got that paid off house like you were talking about. You're worried about how do I protect it? Someone could steal it from me, or title insurance, etc. Well, saving money on not having homeowners insurance is usually that wrong move. Just like you were saying, that house in the neighborhood after the tornado, if they had a paid off home and the mortgage company didn't require them to have homeowners insurance, they might not have had it. Mm-hmm. And unless you can truly afford to rebuild, you're out your home. Mm-hmm. So that's a big consideration. Hopefully you're still keeping that around.
Yeah. Fantastic. Good. Well, thank you very much. I've got a lot of homework myself to do, I think, when I get home. That's it for today. Thank you for tuning in. We hope you'll join us again.
Boxland Media. Think big,